But I think if we just go all the way to the start, Joakim, how did you get this famous shipping blood inside of you? Was that very early on, or what happened to you that got you obsessed with it?
It was a little bit by chance. So I was doing my international relations bachelor, and I started investing in listed stocks on Oslo Stock Exchange. I did some Golden Ocean, but it was this company, Green Reefers. This was a reefer company shipping bananas from Costa Rica to Europe. And they had this weekly rate announcement on their webpage. So I was able to put up an Excel model without any prior experience, and I was able to forecast their quarterly earnings. So I was able to then make money by investing just before and divesting just after the quarter. So I found that very interesting. And later on, I was involved in the student body on finance on NTNU, and I was leading the portfolio management division. And then I was covering then oil service and shipping, and then a little bit by chance, I ended up as a junior research equity analyst on shipping in my first job in Nordea. So. But I've done some other things like being a bond portfolio manager in investment grade bonds. But once you get that shipping bug, it's there to stay.
Yeah, I think I've asked you before, what's the advice to make it in shipping? And you said there's basically two routes you can take. Maybe the combination is the ideal, but you can network like crazy, get to know people, or you can find a truly competence and an edge. And how did you go about finding your particular edge?
That's kind of my very high level analysis, but yeah, I think it's true to a certain degree. So, like people are doing here today, networking a lot. That's a very smart way to build a career. What I've done is I basically want to be left alone in front of the computer doing all the calculations, and then I go home to my family and friends and I socialize with them. So it's I think that's kind of two different avenues one can take, and the latter one has worked very well for me, at least.
So I know you have a big emphasis on math and econometrics, so let's dive into that. But I just want to pick up a famous quote from Sir Isaac Newton that he said, like, you can calculate the movement of the stars, but the madness of people and men, that's very hard to really calculate. Then maybe shipping has a history to showcase that it's hard to really calculate, but you have a deep passion for math and econometrics. So can you dive a bit into why that is so important for you and the models you build?
Yeah, it's I after my international relations, I took financial econometrics and portfolio management on the master's level. And coming into shipping with the econometrics, I thought to myself, there's basically two variables here, supply and demand. And on supply, you have inertia. Demand is highly volatile. And very quickly responsive, and you have fat tail events, as was mentioned earlier here today. So, but that kind of very interesting dynamics, and also you have basically everyone is price takers, arguably. You have some cartel or some alliances and some pooling and so on, but broadly everyone is price takers. So that makes no one can really affect the market. Everyone is taking the market as it is, and with the inertia on the supply side and high response to demand side, you get cyclicality. So applying math to that cyclicality was, for me, quite straightforward when I entered the industry. But I remember coming into the industry, I was told that I should never tell anyone about my ideas because they would laugh at me. And that kind of kind of encouraged me even more. And I also think, as you mentioned, human nature, human feelings. I think, humans by nature are kind of inherently positive and also greedy. And when you have that in a highly cyclical industry like shipping, everyone is kind of always pushing for the next level at peak pricing, and they're never really taking into account that the order book is 50% of the fleet. They're always trying to eke out that last drop. So I think that makes for very interesting dynamics. And for us, relying on the econometrics and the math, no gut feeling, you have kind of a proven concept. It makes for much better in living and investing.
Are there any downsides associated with having a very strict math model, like separating between new managements? Because there are some creativity involved if you're going to judge people and how they behave, or do you just try to stay away from that and focus on the numbers?
I think that's a very good question. So, but the overall overarching answer is relying on the math has proven very successful for us. But obviously there are kind of subjectively concerns you need to take, like how is the company management, how is kind of trend movements, spreading shifts, like the U.S. shale and oil gas was a spreading shift then, which could then absorb more fleet growth. But overall, I would say that the math is what we use and has been very a proven concept for us.
If you go a bit broad and ask the question, what does it take to become successful in investing? So one, I think from my opinion, is that you need to have the ability to suffer and go through hardships and difficulties and come out from it. Do you have any like memorable experiences that really did something with your character or improved your stamina? Because investing is like a suffering game. You can't be right all the time, and you will come into situations that you need to tackle along the way.
Yeah, sure. Definitely. I've been investing for 20 years now. I remember when I was a student, then investing 10,000 NOK was kind of a huge amount for me at that time. And I was much more emotionally involved in the investment. But over time, you kind of take a step back, been managing large amount of money for many years in the bond portfolio. We had $1.5 billion. It supersedes what a human is able to comprehend, kind of the money wise. But it goes both ways. I mean, you kind of step back and not that emotionally attached to the portfolio management. It goes both ways. So a good day, you're like, and a bad day, it's like, But in terms of actual, I remember one investment I did it was a bear VIX ETN. And that's kind of the difference because it was an ETN and not an ETF. So I think it was Credit Suisse, and I placed the bet privately. This was before I started the hedge funds. And they just walked away from the whole ETN. So I was right, but I was left with 5% of the investment. So that was a very good learning, a costly one, but a good one.
What do you think are the biggest differences in the way you invest today if you compare it a couple of years ago? Or is it just built on new knowledge, or are there things that you say are very different nowadays?
So comparing investing privately as a retail investor and then managing a sizable hedge fund, it's a very different ballgame. So we are very focused on risk-adjusted returns. We have 5.4 Sharpe ratio since inception. We have only monthly returns, no declines, but I obviously expect that to change at some point in time. But we are very focused on risk-adjusted returns. So for instance, the past month, our shipping index, the broad shipping index, has risen 22%. We have not been able to deliver 22% to our share or investors, but we have not aimed at delivering 22%. So what we are looking at kind of overpriced equities, and then we selling down, and we then moving also into different shorts. And then at some point we expect those pricing to come down, and then we kind of refocus the portfolio again. So we will, our fund is here for the long run. We are not here to capture any long-only movements. We will likely underperform in long-only markets, which we have seen the past few years. But we are here through the cycle. So we are here to be able to make money through the cycles. And I think that's very important because many people are investing in shipping long only. And that's, in my opinion, is not a good strategy. It could potentially work in industrial shipping, but at least in commodity shipping, I think in Udin, we have a long-short strategy. I think that's pivotal.
Is it easy to have that conversation with the people invested in the fund when they look at indexes and particular companies?
I think it's quite easy when you explain what we are actually doing. Because people can go out and buy a long shipping ETF if they want. That's not why people are coming to us. That's for the risk-adjusted return we have delivered over time.
Just backtracking a bit, because when you set up Gersemi, the hedge fund, you had a history of communicating quite frequently on social media and really having your own way of investing. Was that like the main ingredients to being able to set up a fund? Because as far as I understand it, fund industry are super competitive nowadays. So it's not as easy to raise the capital necessary to have a fund going.
I think obviously my presence in media and social media was very helpful, but also I was pretty much continuously ranked number one shipping equity analyst globally by Bloomberg for almost 3 years. So I think it's kind of a symbiosis. So people made a lot of money off kind of our research, and then they came to me and said, why can't you just kind of manage the money rather than redoing the investment based on your research? So I think it's a symbiosis there, and also kind of our shipping fund is kind of the only investable pure long short shipping hedge fund with a light-footed strategy out there. So I think also, and we have very decent returns. So I think that's kind of where we see the attractiveness towards existing investors and new investors are. And we have investors now investing for the fifth time, and we incepted only in July. I was the largest investor from the onset, and now I've been dethroned. It's a good story, but I'm going to try to increase my stake as soon as possible. But it's a very good story as long as you deliver the returns. We don't do any marketing, so we do just live the returns, and we have word of mouth now in the fourth chain. So that's kind of what we do.
So you brought on a portfolio manager, Fredrik Svem. So now you're two people managing the portfolio. How would you, if it takes a bit behind the scenes, how you guys work, how many cases do you look at? Because you said part of this strategy is to be quite flexible and nimble. So does that mean that you take on a lot of positions all the time, and then, or how would you describe the working process?
I can explain for hours, but I'll try to shorten it down. No, so we at some months we have turnover close to 50% of the AUM. We are extremely active, and we are continuously rebalancing. We have the math foundation, so just kind of high level. Two things affect us when you're doing our investments. It's the fundamentals, and these are the things that usually don't change too much within one quarter. And then there's pricing of the assets we invest in. It's mainly equities, but we can do everything like bonds, investing and derivatives as well. So what we have been doing, let's say last month, the fundamentals have been quite unchanged. A lot of these shares have skyrocketed, and what we have done there is been selling down continuously according to our predetermined plan. So it's quite an easy way to do it, because we have the math foundation and we just follow the plan, as long as there's no fat tail events. But if in the event, we just go into our models and model that within an hour or two and just roll it out throughout our model universe. So we have everything in-house and everything is linked together, and it's kind of a model universe I've built over the past decade, and it's very integrated and working very well. So we are basically covering every listed shipping equity out there, and we can take up coverage within an hour of a new company. It's very easy. And then we are working closely together, Fredrik and I, and it's been a very fruitful working relationship so far, and it's been just fantastic. So it's always hard to give away responsibility. I've been doing this alone for 10 plus years, and now I have to involve someone else. It's a little bit challenging, but that's something I have to work with.
What would you say are the most important traits you look for when you hired him in particular? What do you look for? Someone who can have different thoughts from you, or get in the same system and believe in the models? Or do you want someone to argue and find the other angle to it?
Yes, I should answer yes to the latter one, but no. I'm looking for. It was very important to find the right personality. I spent a lot of time talking to a lot of people. I had 2 days of back-to-back interviews, 40-minute for each person, and just to find the right personality. There's so many qualified people out there, but since we're going to work together, 2 people, we have outsourced everything else. So we have 2 people doing the portfolio management and analytics in Oslo. So I spent a lot of time on that, and obviously Fredrik was top of his game in terms of academics and working experience from Nordea shipping department. And it's been just wonderful. It's been working even better than I had expected. So it's very, very good times at the office in Oslo at Gersemi Asset Management.
If we have the same conversation here 5 years ahead and Mike welcomes us back again, what would be like the main goals? Is it the size of the fund, the performance? Because there are many different ways you can take, right? And there's pros and cons to every aspect. Do you have a clear vision for the next 5 years?
This fund is a light-footed fund, so we have maximum limitations on the AUM. Being one of the biggest investors, we are not going to. This fund is by the investors for the investors, and we are earning our money from the performance fee and investing ourselves. And in a year of performance, we are waiving our fixed fee and also covering the fund's operational costs. So I think that's quite unusual. But we are here we're going to kind of align it so we are here in the same boat, earning money together. And if in a year of potential non-performance, we're not going to earn a lot of money on ourselves. Was that answer to your question? Or?
Yeah, but the question was just like, do you want to increase people in-house, and is that a way to go? Or
so no, we're not gonna blow this up to a 1 yard fund. So we are happy around $100 to $200 million, and we are potentially looking to set up new funds, but I will not be involved in those new funds because I found my niche and I'm just going to focus on that. So then we will have silos potentially. We have some interesting ideas, which are a little bit too early to discuss here today. But
any hints?
Sorry?
Any hints?
Sorry. We have, but we have the setup, so we can onboard other managers. We can build our set up some new funds ourselves with then also hiring new managers. So we're in a good position, and the future looks bright.
So let's take a segue a bit over to the shipping markets, because as far as I understand it, there's been good times, and, when there's bad times, the job is quite easy. You need to survive, and hopefully you can buy cheap stocks with low valuation. But now it seems like the party has been strong. So what's your main observation of where we are in the cycle? And of course, it's a bit different for each sectors, of course, but any broad observations of where we are?
I think for at least for our fund, in long short, we can make money in any market. So it's we're just hoping for volatility and cyclicality. That's where we're coming from. I think in terms of obviously we can go through every single market and discuss the supply and demand, but I think there's some really strong long stories in dry bulk and oil tankers due to the lack of investing over basically a decade in the fleet, and also with the disruptions on kind of visibility on the life of the asset. Usually it was like 25 years when I started in the industry. Now you don't see even more than 10 years, and you most likely will have to do some investments in the vessel to extend life in an economical, viable way after those 10 years. So it's a lot of uncertainty, and people are still not ordering meaningfully in a lot of these segments. LNGs, a lot of vessels are probably a supply glut in a couple of next year before the new export capacity come online. But no, every segment has their own kind of dynamics, and we see opportunity in every segment. We're just mindful of pricing.
What makes you most curious then if you look at the second half of this year? Any strong signals you're paying close attention to?
I think our coming into the year, our dry bulk was kind of what we were looking forward to the second half of this year. But both asset values and share prices have kind of disconnected from earnings and replacement costs. So that makes us quite wary of the segment. But the oil tankers are looking extremely interesting. We have volatility in what is usually a low season. So that's always a good sign when you see that kind of volatility. And I think Red Sea is kind of key here. It's from our point of perspective, we like cyclicality, we like forecasting, and we have cyclicality forecasts for the next 5 years most often. When we look at the Red Sea, we are more reactive than proactive, and that's because our mandate is not to speculate in geopolitical events. But that said, when things are happening, when the headline comes, we are very light-footed, and we can shift our positions very fast. And we do seen a lot of examples on this since inception, that we are able to change our position on headline news quicker than, let's say, the generalist in the US, which needs to maybe have a call with an analyst, maybe have a meeting in their investment committee before they can change their position. So that has been a little surprising even for me, how much money we have made for the fund by doing quick trades around headline news and also other pieces of information floating around in the market.
So in 2024 so far, what's been the best and worst investment you have done?
So we're not that far into 2024 yet, but I think...
or from the fund inception, maybe?
Yeah, maybe that's... But I think we incepted in July last year, so we don't have that much track yet, but we have 35% return since inception, so at least our investors are quite happy. I think maybe the worst investment was around December, January. We went short dry bulk. We shorted Golden Ocean and Starbulk. Good liquidity in both names. I think we ended up with slight positive on Starbulk and a slight negative on Golden. But it was frustrating because what surprised me was that asset prices really surged during that period. So we came into October, I think, close to $70,000 a day on the Cape, and it fell down to around 14 trough in January, and that was as expected. It's seasonality, and very often the market is taken a little bit by surprise by these large movements, but we who knows shipping are used to them. But asset prices rose. 1 year time charters did not rise. Newbuilding prices rose, so some support, and equity pricing rose. And then coming into January, that was when we wanted to go long dry bulk, but pricing was kind of up 20%. And then we're looking at our models. We see this connection between earnings, replacement cost, and the vessel value. But regardless, we went long before Chinese New Year's. We had a good ride, and then we divested again and have been short periodically since then. But it was that kind of was potentially the worst investment we have done, because we came out flat, but we kind of missed the whole rally, which we would expect it to have happen at a later point. And in terms of best investments, I think oil tankers basically been long since inception. We have done a lot of rebalancing up and down with the volatility during that trend. And the real GCs has been very lucrative for us. So we have not been long only and ridden by the kind of the trend, but we have been trading extremely actively around the trend, inside the trend. And we have a lot of inside models which are very good at predicting the spot rate movements in the short period of time. So that's been lucrative for us.
Any topics you overlooked, and in hindsight was like,
I'm not to my recollection.
The model catches everything.
No. Obviously not. Not these price movements, counter-seasonal price movements, and so on. But we have always clear plans. And then again, coming back to what's changing, is it the price or is it the fundamentals? And as long as the fundamentals are there and the plan is there, We then have pricing, and in dry bulk, for instance, pricing is higher when we're going to enter before Chinese New Year. We just allocate less capital than we otherwise would, and we get a decent return on that allocation, and we divest according to plan at kind of the predetermined level.
Okay, so just some final quick-fire questions, and I know the answer can change probably in days and months, but if I ask a question, what's the most overvalued shipping segment right now? What would you say that is?
I would again highlight dry bulk. In my previous arguments, they have disconnected from our fair price value models on the shipping values, and the equities are priced quite high versus low in an historical context. So that's kind of a quick answer.
And the opposite, undervalued. What's the most undervalued right now?
I think that question is much more challenging because investors in shipping are surprisingly reasonable these days. Having in my experience, and coming back to my point with human nature being positive and greedy, they tend to, at peak pricing, price way beyond, and at trough pricing, price way below. And now the things are fairly priced. Car carriers, they have good backlogs, priced fairly. Containers, a lot of them have good backlogs. Now they're riding kind of Red Sea wave, fairly priced. And then oil tankers, fairly priced. So, and LNG companies should have fallen much more, but they have backlogs. So, again, fairly priced. The yield pricing on Flex, for instance. No, it's a little bit boring, I think, from our perspective. We need that volatility and cyclicality, but anyways, we're able to deliver 35% in 10.5 months. So, yeah.
So the last one I had is, what has been the most impressive shipping company so far in 2024? It doesn't have to be an investment, but you looked from the outside and been very impressed by management or decisions made.
Yeah, no, I think I think Øystein Kalleklev is a very, very good CEO. So I've seen what he has done historically with Flex LNG. That's been very impressive. As an analyst, I had a sell recommendation when the share was at 50 or 60 Norwegian crowns, and now it's like 250 or something. But long charters, good backlog, dividend yield, appealing to the U.S. yield focus market, very impressive. And now with being a CEO of Avance Gas as well, he's kind of taking some of the similar steps there. The latest ship sales kind of distributing to equity holders. Not many ship owners or ship or company managers do that. They tend to build or invest even more. So the only thing is that with Avance Gas, the liquidity is not there anymore, so it's not very investable for institutional investors. But I think he's done a good job with both companies.
Let's end there. Joakim, thank you so much for taking the time, and thank you all for listening. Thank you.